Hi there, my name is Jonathan Roth. This is Cambridge House Live. Thanks a lot for joining us. I am joined now by Mickey Fulp. He's the Mercenary Geologist. Thanks so much for joining me.
Thanks for having me, Jonathan.
The junior markets, you're one of the top experts in this. What's going on with these junior companies right now?
They're getting beaten up unmercifully.
They sure
and
are.
the real problem is there's no liquidity. There's the risk on, risk off sort of thing going on in the major markets. And for us, it's been risk off for quite a while. And there's just no desire for people to come into what is certainly one of the most riskiest segments of the market, but a very high risk, high reward part of the market. And so we're just seeing there's no bids out there, and so low liquidity leads to low valuations. We all know that.
So there are some folks that are saying that we saw a bottom here a couple of weeks ago. There's some people like yourself that say look till Labor Day or even later. Explain that for me.
Okay, well, I had
some
fellow newsletter writers calling the bottom in the end of April, and I personally didn't see it, because you always have this phenomena, sell in May and go away. Well, that happened not to any great extent, but again, there's no bids out there, so valuations went lower. What we have coming now in a month or so is the summer doldrums, where everybody in Europe goes on 6-week vacation to the beach. New Yorkers are in the Hamptons, Torontoites are at the cottage on the lake, and everybody in Vancouver is up in the mountains. So what I look for is additional problems with liquidity and lower valuations to happen in July and August.
Okay, I got you. Now, this is a really tough time for retail investors to try to figure out where to put their money. This said, there are some really great deals out there right now in the junior market. And despite the fact that we might not have reached the bottom yet, you think this is a good time to maybe potentially jump in?
Well, it kind of depends on what you're trying to do. If you're jumping in on a new company, I would personally myself, and bear in mind I'm not a certified financial advisor, so I can just tell you what I am doing. And I'm not buying right now new companies because I think valuations will go lower. Of course, we can't find the bottom. I know some high net worth investors are taking the tack that I want to own this stock and I'm going to put in bids. If they get filled now, if it goes lower, I'll buy more. So they know what they're going to buy. But right now, I think we've got lower to go, and I'm really not ready personally to jump in to any degree.
Really, you're not at all. You're staying back.
I'm going to wait.
You're going to wait and see what happens.
And watch what happens in June.
All right, you know what? A lot of investors who are looking at the junior mining space, let's face it, they don't know one thing about geology. You know, you do. What should a wise investor do before making a decision?
Well, it's very hard for the lay investor to get any sort of real handle on the geology. So I have a vested interest in promoting my business, and I would say listen to a newsletter writer that has some geologic experience. So there's a few of us out there, not very many, but we bring a little bit more to the ball game, I think, than the average newsletter writer, because we can make that cut on the project. So if I'm evaluating a junior resource company, the first thing I do is look at the project, because there's over 1,700 of these companies, and that's way too many. So I want to get it to a manageable number quickly, and I do that initially by saying yay or nay about the project.
Right. Now, what about, so you take a look at the project first. What about the management team? And in particular, this is an issue that's come up a lot over the last several years, and that's the remuneration for CEOs and for other executives in the company. Sometimes, frankly, what they're being paid looks pretty out of whack for what they're delivering. Well, you know, to what extent do you take a look at that yourself personally, and that you would tell other investors?
Well, I certainly take a look at management, and generally I have some criteria on management. I want them to be technically oriented, so I would prefer the CEO, president, if that's one or two people, generally one person. I would like to see that person be either a geologist or an engineer, because then he understands the technical aspects of the business and his project.
No, I'm going to just stop you on that one, because I know there are some people that say if the CEO is a geologist, he gets too involved in the dream and he can't divorce the financial and aspects to the story. But you don't think that?
Well, no, and that's not quite true, because at one time I wrote a piece called "The Trouble with Geologists," and I talked about this specific thing. So yes, that can be a problem. You need a team of geologists, and you need someone to be what I would call an economic geologist, who is very in tune with the reality of his project. In management too, I want to see a successful track record. So not only experience in the business running previous companies, but a successful businessman in that regard. So I would not consider an entrepreneur someone who has bankrupted 3 companies previously. So you want to see success within the junior resource sector too.
Right. Okay, now I guess the question is, how do you define that success? Because I know that there are some executives that have gone through this business and they take a company and they'll run it up, it'll come back down, they'll move to a next company, they'll run it up, it'll come back down, and this has been the track record of their career. And frankly, there are a few of them, quite a few of them out there.
Absolutely.
Do you stay away from some of those guys, or some of them are? I mean, because in some cases, look, it is somewhat of a crapshoot to know what's actually in the ground.
Right. Well, and you try to stay away from those people. And I have a broker that calls those companies lifestyle companies, and you alluded to that through management remuneration.
Right.
And that is to be avoided. I also want to make sure that I also call it mining the stock market. So they're not trying to mine the ground, they're mining the stock market. Certainly every junior goes in phases, so they have their ups and downs. They have volatility. Those in good companies become buying and selling opportunities. Buy when they're low and they're unloved and unwanted and undervalued, and try to sell at the other end of that equation. Ultimately, what I want to see, and this goes back to the project, I want a project that I consider has a good chance of making a mine someday. And like you said, at some point, it always becomes a crapshoot, but you want a company that progresses through its decision points in a timely fashion.
Right, okay. Now let's talk about some of the precious metals, gold, silver. Where do you think gold is going, and how is the price of gold going to impact the junior markets?
Well, generally the price of gold is coupled with the junior markets. It's decoupled over the last year or so. I would expect that to somewhat remedy itself now, because
you think it will? I know there's a bit of a debate that says that was just a correction, but you think that there's an equilibrium that has not been reached yet?
I think so, and perhaps I hope so too, because it's certainly out of whack. And when markets get out of whack, they usually correct themselves. I look for gold to be range bound, and at the beginning of the year, I said something $1,500 to $1,900 this year, and so we have been range bound. Last week, we saw gold get hit pretty hard, but what did it do on Friday? It was up $64. I haven't really seen it today. Early this morning it was $16.15 or something like that. So I think we can all live with a $1,600 gold price. Anybody that has a deposit that's being mined, or an advanced deposit that has a chance of being mined, if you're uncomfortable with $1,600 gold, you don't belong in this business, in my opinion.
Yeah, for sure. Now, where is it going? You said this year you see 1,900. After that, are we going to $2,000? Obviously, there's a big psychological barrier there, but sooner or later, you think we're going to cross that threshold?
I think you just look, and I'm looking at the past. Look at the past. We've been up 11 years in a row, January, year over year, 11 years in a row. Now, we may not get there this year, but we are printing more and more fiat currencies. So gold retains its value. We should probably not talk about the price of gold, but the value of gold. What's gold being valued at in US dollars right now? Well, it went down largely because of a strong US dollar. But we're printing more and more of those. They become worth less and less. They lose their purchasing power. So from that point of view, I expect gold to continue to rise for the foreseeable future on a year-over-year basis. Now, we will have all sorts of perturbations within a general uptrend, but I don't see any reason why that should not continue.
Okay, I'd like to chat a little bit about jurisdictions now. What are some jurisdictions you're interested in? Maybe some places you've been to lately, or some places you're going to? Some places that really interest you.
Well, right now I'm interested in Europe, and
you are interested in Europe.
very interested in Europe. And And the reason is I have been successful with some companies in Scandinavia, Portugal, various other countries. So Europe kind of stands alone in the fact that they have the European Union, if it survives, and we're all predicated on that.
Sure.
But, and I'm probably predicated on the fact that we're not going to have another global economic crisis. But there are jurisdictions in Europe that have been underexplored for a long time, specifically in Scandinavia. And
why is that? Environmental regulation or just?
Difficulty of terrain, difficulty of exploration, especially in Scandinavia. You have glacial till cover most deposits, so you're using some sort of indirect methods. But for instance, Finland and Sweden are two of the most mining-friendly countries in the world. Sweden supplies most of the European Union with most of its metals. It's number 1 or number 2 in most major metals. So we've been very successful in my newsletter dealing with companies in Sweden and Finland, very successful as these companies progress. So I'm looking there. And of course, I'm a veteran of South America. I speak Spanish. I spent a lot of time in countries like Chile and Peru, and also Mexico, and so I look for those countries to continue to be in the forefront in South America. That said, there are certainly countries in South America that I avoid like the plague.
Yeah, I mean, I would assume Argentina would be one of those.
Argentina is on the cusp right now, but certainly Bolivia, Venezuela, Ecuador, I have no reason to think that there will be geopolitical situations that will ensure people that find something there are able to develop and not have it nationalized.
Right.
The other country I'm very interested in is Brazil, and Brazil has the geology that it should be, that it will become a major gold producer at some point. It's underexplored because of difficulty of infrastructure issues in the jungles of Brazil, but it certainly has the geology to succeed.
Right. Well, listen, I appreciate your time today and look forward to the next time having you on the show.
Okay, thank you very much.
All right, thank you.